Welcome to our YouTube channel, where we debunk the myth that it's too late to invest in the stock market if you're 45 years old or older. In this video, we'll discuss the how, what, why, when, and where of investing in the stock market at this stage of life. How to start investing at age of 45. Many people believe that investing is only for the young, but that's far from the truth. It's never too late to start investing in the stock market. In fact, this can be an excellent time to focus on securing your financial future. Here are some essential steps to get started. 1. Assess your financial goals. Before you begin investing, it's crucial to have a clear understanding of your financial goals. Ask yourself questions like, what are you investing for? Retirement, education, or a specific financial milestone? What is your investment timeline? How many years do you have until you need the money? How much risk are you willing to take? Are you comfortable with potentially higher returns but also the possibility of losses? 2. Determine your risk tolerance. Risk tolerance refers to your ability to handle market fluctuations and potential investment losses. As an older investor, you may have a lower risk tolerance, aiming to protect your wealth rather than aggressively pursuing high returns. Consider factors such as your financial stability. Do you have a stable income and emergency savings? Your time horizon. How many years do you have until retirement or when you'll need the invested funds? Your emotional response to market volatility. Can you handle short-term fluctuations without making hasty decisions? 3. Increase your investment knowledge. Educating yourself on the basics of investing is crucial for making informed decisions. Here are some key concepts to focus on. Investment options. Familiarize yourself with different investment vehicles such as stocks, bonds, mutual funds, ETFs, and index funds. Understand their characteristics, risks, and potential returns. Diversification. Learn about the importance of spreading your investments across different asset classes and sectors to reduce risk. Long-term investment principles. Understand the power of compounding returns and the benefits of staying invested over the long haul. 4. Research and choose an investment approach. There are various investment strategies to consider, depending on your financial goals and risk tolerance. Passive investing. This approach involves investing in low-cost index funds or ETFs that track broad market indices. It aims to match the overall market's performance rather than trying to outperform it. 5. Consult with a financial advisor. If you feel overwhelmed or uncertain about investing, consider seeking guidance from a financial advisor. They can provide personalized advice, help you navigate the stock market, and create an investment plan tailored to your needs. 6. Open a brokerage account. To invest in the stock market, you'll need to open a brokerage account. Research different brokerage firms and consider factors like fees, account types, customer support, and available investment options. Choose a reputable and user-friendly platform that suits your preferences. Investing in the stock market at age 45 or older is a prudent step toward securing your financial future. By assessing your goals, understanding your risk tolerance, and gaining knowledge about the market, you can make informed investment decisions. Remember to start small, diversify your portfolio, and seek professional advice when needed. It's never too late to begin investing and working towards your financial aspirations.